This is how you can start catching 1,000 tick trades using the 15-minute opening range breakout. And you can start catching the trade way before price even breaks out of the opening range. Although it sounds too good to be true, I formulated a strategy that allows you to do exactly that, and in the next minute I'm going to teach you exactly how. The first thing we got to do is just identify where the 15-minute opening range is, and that's going to be our first 15-minute candle of the day, which starts at 9:30 a.m. Eastern or New York time. We then want to go to the higher time frame to identify our daily bias or daily direction of the market. In this example, I had to look at the weekly time frame to identify that price was going to be bullish, because we had come down and swept sell side liquidity and traded out of a weekly bullish for value gap here and a weekly bullish for value gap here. So now I know that I want to see price break the opening range high and get expansion to the upside. Well, how do I know where price is going to expand to? Well, most of the time I'm looking for buy side liquidity like Asia or London or previous day high. But in this example, we'd already taken all of those out. So I needed to use a new strategy, which would be the Fibonacci retracement tool. And I use that from the high to the low of the orb. And I am looking to target the first standard deviation away from the orb high. And this is exactly how I catch the trade way before anybody else does. I identify that we have a 5-minute bullish for value gap right here at the 50% of the orb. And now I see that price has swept sell side liquidity going into that 5-minute fair value gap and created a 1-minute bearish fair value gap as well. So I know that once price closes above this 1-minute bearish fair value gap, I now have my confirmation to target a long position. And this is how I combine my IFVG GUI model into the 15-minute orb. So right here, you can see that price closes above that IFVG. So I want my entry to be right at that close or a retest of the IFVG level. I want to keep my stop loss below the wick of the IFVG, and I want to target that first standard deviation for a full TP. Now, most of my trades are pretty quick, within 5 to 15 minutes, but this trade was an example of a 1,000 tick setup that anybody could have caught. Now watch how this trade plays out. We instantly get a nice reaction off of that 1-minute IFVG, but then we chop around for a little bit. But if you're able to hold on to your trades and have real conviction in your strategy and your daily bias, you could have held this trade for most of the morning going into the afternoon, all the way to that first standard deviation just like that for 1,000 ticks.